You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' number means it's time yet again for the option block, everyone's favorite bi-weekly source for a little bit of options, wit, and wisdom, and info, and hilarity, and unusual activity, and education, and all sorts of other fun stuff just swirled together to make the delicious broth that is the option block. My name is Mark Longo, coming to you from the Options Insider Global HQ here in the options mecca of the world, Chicago, Illinois, and we produce quite a bit of options-oriented content all day long here. It's not just me yakking on the radio, even though there is quite a bit of that, me and quite a few others. But there's also a lot of written content, a lot of other fun stuff. We tweet out a lot, Facebook, all sorts of fun stuff. Where can you find the easiest place to get access to all that? Well, of course, the mothership, the flagship, theoptionsinsider.com. You can read all the written content there, follow all of our social media outlets, all that good stuff. And once you've done all of that good stuff, which will take you many, many hours, then, of course, click on that Insider Radio Network tab, and your adventure has begun. You are off to the races into the world of all things options and options-related, a little bit of vol, a little bit of trading, a little bit of advisor-oriented stuff, a dash of futures options, mix in a heady brew of some interviews and conversations and other fun stuff, and you're pretty much off to the races there now. 9 years, yes, 9 years worth of content waiting for you at the push of a button. So go for it if you dare. It's quite the deep dive into the world of options. Of course, all the other places you'd expect it, iTunes, TuneIn, Stitcher, even our app in all of the major app stores. And while you're downloading, while you're streaming, while you're subscribing, while you're following us on all these myriad different social media outlets, send us your questions, send us your comments, send us your pearls of wisdom. We love to hear from you guys. And joining me on the old program today, my usual compatriots for this here option block program. Starting off, let's go in order of proximity today. So the closest to the global HQ of options is this little provincial hamlet known far and wide as St. Charles, Illinois. And as the Google Earth peers in, zooms in to St. Charles, Illinois, we'll see a little dot marked HQ of Uncle Mike Tussaw. And that is where we find Uncle Mike. Uncle Mike, welcome to the program, sir.
Always happy to be here. Excitement abounds us every show as per usual.
Yeah, we're certainly not wanting for things to talk about these days. The markets are obliging, which is charitable of them, to say the least. And we also turn our gaze a little bit farther. I'm not sure if Google Earth can go out that far, to a little place they call the hinterlands of Maine. And there on the shores of the mighty ocean, waves crashing, ice rink frozen, you shall find the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the program, sir. How was that? Any umbrage on that?
No umbrage at all, except we've defrosted.
The ice rink is melted?
Yeah.
No.
We were totally the ice rink, well, it actually didn't melt in a catastrophic way. Just the top layer got a little, water and it will freeze nicely, but so not so bad. It wasn't a catastrophic melt. We're okay.
Wow. Okay. What are we saying? Where even in the end of January in Maine, you can't have an ice rink?
You know what, too, is I haven't noticed because our area, we're surrounded by water and a lot of fresh water, very close to salt water. So, those ice shacks you see, probably in picture postcards somewhere on massive bodies of water. Not as many this year because we just haven't had the sustained cold.
I guess they were there, but they fell through the ice.
That would be a problem. But you would be surprised. There's no cars on the ice this year. There's none of the cool winter stuff we normally see. So.
Wow, you move all the way to Maine just to build your kids an ice rink, and look what happens. It melts.
And you get screwed.
It melts in January. I guess you got to go to Puerto Rico, the Bahamas, to build an ice rink these days. With global warming, everything is on its head. All right. But speaking of things that aren't on their head, this show, it's rolling quite along here. So let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, yet another week unfolding for us with sucker punches and rallies and sell-offs and that little bit of vol we've come to expect still lurking in the recesses of the marketplace, even though it is coming off a little bit on the major indices out there. We are recording this, of course, Thursday, January 28th for all of you playing along at home, and it's another green day on the screen. S&P up about 0.5 percentage point, Dow up about 0.75 percentage point or so, and the NASDAQ leading the charge to the upside off well over 1%, nearly 1.5% on the day. And with all this green on the old screen, that means VIX cash inhaling a little bit off about a handle, down in the low 20s range. So still frothy, still heavy, but not spiking into the 30 handles the way it was not that long ago. And we have a lot of stuff to catch our eye today. We are in the teeth of it, listeners, in terms of forget the macro stuff, forget Fed waving their finger and all that nonsense, and did it leak, did it not, and all that other fun stuff. It's earnings. We can actually look at tangible, concrete numbers, which is such a welcome change of pace, given all the other macro nonsense that usually draws our attention away, and certainly has been this month. But before we get to all that fun stuff, let's check in with each of our cohorts, our compatriots, see what's catching their eye. Mr. Rock Lobster, while you're drying your tears over the fate of your beloved ice rink, what else is catching your eye in today's market activity?
I think we have I'm not totally 100%, but we might have a contract low. I'm trying to see how it closes today for March VIX future. The reality is no rally really lives anymore without the burning candle of QE. It just that run back to 2100. I think it's going to take all year if we even get that far, unless something really fantastic happens. So no, we didn't quite close. I thought VIX was going to close in the 21 handle. Looks like it's marking a little higher. The reality is you got a rally that's a 0.5 point. VIX is barely down. Volatility products, the futures came in a little bit, but we're still we're still backward. Can't get out of backwardation. Backwardation always was, danger, Will Robinson. And we're still there, but we had good Facebook earnings. We have Google coming out. The Amazon earnings were good. I think actually even Apple's earnings, they gave bad guidance, but they're still selling a lot of iPhones. So, but we all know the story with Apple. They need a new product to sell at this point. Outside of oil, financial earnings have been really healthy. And also technology earnings have been really healthy. And the market is it's basically doesn't care. So like we joked about, I think last Thursday, I think the evil, the darkness that's lurking in volatility is still, I think it's still instability about what oil, the market is hypersensitive to credit issues again after the financial crisis, although the risk for a lot of the oil patches spread around much more, to straight up investors, pension funds and stuff that just might have to eat it or restructure these bonds. So, besides oil and China, now Chinese economy doesn't look bad, but their stock market just, is down 4 or 5% a day, and that weighs on sentiment. So I think most of the current here is okay, but without the market, without the pablum of QE, I just think those 1% to 2% rallies we've all been really used to and gotten trained to over the last, I guess let's call it 5 or 6 years. They're just not here anymore. It's going to be making money the old-fashioned way. You're going to be going to Tusaw's class and learning how to write options. And that's how you're going to make money.
The pablum of QE. You've been on the radio for a little while now. You started to come up with these little pearls, these little nuggets. Andrew Giovinazzi, the radio man. But I don't know if you know about it. Speaking of VIX, Mr. Rock Lobster, I don't know if you know about it, but we are outside of the red zone, at least according to Goldman. So therefore, all concern shall be waived. There is indeed no fear of recession now. And how they define the red zone is below 25. When VIX is below 25, I guess above 25 and climbing. That's when they term the VIX is in the red zone, which historically coincides with flat or negative U.S. GDP. So there you go, Mr. Rock Lobster. Nothing to worry about. We're outside of the red zone.
I feel better now. Actually, my zone for VIX is when we're above 22. It's always the danger. That's the danger zone. So, but I'm glad I'm only 3 handles off from Goldman. I don't feel so bad anymore.
There you go. That is kind of the fun thing. We talk about this on vol views too. I'm sure we'll get into it tomorrow too. But everyone seems to have their level. Their personal level. I think we even talked about this recently on the show, about where is that level where you're concerned, where you think there's a little bit of too much vol is a good thing, where retail is maybe starting to take their ball and go home. Most people, it seems to be in the around the 30 handle. Certainly by 40, you're definitely in that range. But certainly a lot of people seem to say around the 30 handle. Goldman saying 25. Mr. Rock Lobster taking the cake on the low line. I think 22. When it hits 22, Mr. Rock Lobster is taking his ball and going home.
Well, I don't know if I'm taking my ball going home, but I'm definitely I become a much more. My desire to own Gamma goes up very, very quickly. I'm not much of an option seller at that point. I'm a watcher and not a seller.
And that's when you stop subscribing to the Don Schlesinger philosophy of trading.
Yeah, sell all options. Well, Don always says options are meant to be sold or not, and I think when the vol is ridiculously high, or the realized vol is very high, he would slow down and take his finger off the sell button.
Maybe he'd sell 6 instead of 10.
Exactly.
All right, Uncle Mike's waiting in the wings. He's chomping at the bit to get in there. Uncle Mike, a lot of earnings stuff to get to. We'll get to those in a minute. But before we get to all the stuff popping off today, what caught your eye in today's activity? And indeed, perhaps earlier this week, a little thing we know is the old fruit company making some headlines. Seems like below 100, at least for the time being, is going to be the new norm out there. Did those numbers, did they soothe you? Did they make you want to get back in? Is this, you're kind of washing your hands of this thing? What's going on there, as well as what caught your eye today?
I did start to scale into Apple a little bit after the earnings announcement.
No, you're back in? Oh, that's it. That's going to be the headline. Uncle Mike, back in Apple.
Yeah, it's really the amount that I put back, the amount of deltas I put into it. It's really nothing to write home about. But I would say it's probably maybe 8% of the amount of deltas that I had in it back in the heyday. Anyway, just looking at Apple, once again, they need to come up with a great product to really go back up to the numbers with which they have. But on the flip side, they are at about 50% retracement from the lows, meaning they were down at around the 55 level. They peaked out at the 134 level. And with them at the 95 level, they're around the 50% retracement level. So that, from a technical standpoint, me being the resident expert technician, of course, the fact that I'm the only one on the show that looks at a chart maybe once every 6 months, then that makes me the technician of the show. I think that's one reason to kind of take a look at it. Second reason would be that fundamentally, they're still a pretty decent company in that they don't have any debt. They actually have a couple billion sitting in the checking account there in case they need it for a rainy day. Alongside that, they still are making money. They're still selling iPhones. Now, granted, the bad news is that they might have their first down quarter or they might have their first. They might not make as much as they did the year before this year in something for the first time, and I think it was 12 years. So with that, I think with all the bad things that kind of spooked the stock, to have the 5% drop off from I shouldn't say that, probably the 6% drop off from the earnings announcement, I really think the good outweigh the bad here. Now, the reason that I'm not going all in on this is the fact that there's really no exciting new products right now. Until people start buying iCars or the iWatch becomes a cool thing, I'm not going to be a very big buyer on it. But in the meantime, with the other things with which I've mentioned, it's not a bad place to be. So on the fruit company, that's one thing with which I'm looking. On it, I kept a very basic position. I just got into the stock and have like a 1 year out basic collar, plus and minus $10. So nothing exciting whatsoever. The other things with which I've been noticing over the course of the last few days, we're still technically down on the week in the S&P 500. Oil has come back a little bit. So I still think we're closer to the bottom than to the top in the oil stocks as well as oil. So just to once again beat that drum with which I tend to do on this show, but I'm looking forward to the market making new all-time highs again, because then I can say that never has the market ever been a better time to sell than right now. But I can't say that yet, unfortunately, but looking forward to getting the opportunity to, should the S&P gain another couple hundred points. Other thing that I think is something that's very noteworthy in having to do with the three-letter word that we all should really never talk about, but with all of the news of us possibly raising rates and the fact that we did have that quarter-point raise about a month ago, and the Fed paused this past week, look at TLT. TLT closed 2014 at 125.92, and TLT today is at 126.23. Now, granted, you could argue and say, well, it has had a lot of upward and downward movement since then, which it has, but I'm not convinced there's a lot of fear in the marketplace over a lot of rising interest rates. With that said, the Fed did whatever they would have done this week was wrong. If the Fed would have raised rates, then the market would have crashed and everyone's saying, oh, the Fed's raising rates, oh, we got to sell. If the Fed would have lowered rates, they was, oh, these idiots, something's going on here. Then the market would have sold off. The Fed paused, so we sold off. This was one to where there's nothing they can do there's nothing that they could do to make everybody happy. But with that, they brought that on themselves with how they've handled this over the course of the last year. So it's kind of a good thing in a way, I think. But to expand on TLT and interest rates and what's happening with that, yes, I could see some interest rate raises over the course of this year. Maybe we could go up 50 basis points over the year, maybe a little bit more, but I don't think that they're afraid to raise interest rates at this point. I think that the fact that they paused and the market is actually not selling off. It did sell off yesterday, but we didn't have the continuation today. I think that can be a good thing. So on it, I think that we're in for probably a slower market this year, not necessarily a 30% up or a 30% down market, but a slower market. Whether it's up or down, keep listening to the show, folks.
All right, and things are popping off as we are recording today. It is one of the big earnings days here on the street. We saw some stuff before the open today. Names like Ford and Alibaba lighting it up, helping to lift the market. Ford showing decent numbers. A lot of people thought maybe some of the Chinese turmoil may impact them more than it did. But the stock was up early, and then the end of the day, it ended up down a little bit. So one of the few reds on the screen today, despite the fact of a decent earnings coming out of them and a rally day in the market. So Ford not feeling the love. But after hours, looking here at some names lighting it up, and Amazon going alphabetically is one of the first ones to pull our attention here. This one has been rocking and rolling, closing today right around 636 or so. This is the name. They were pricing in about a $53 straddle or so out there, so about 8.5% they were pricing in, and this thing was lighting it up pretty strongly with calls throughout most of the day. In fact, I think even Bloomberg writing something up today about just the upside calls in these weekly or near term, I should really say now, not even weekly anymore, calls lighting it up, like the 650s, 7,500 of those going up today, 4,200 of the 640s, 4,200 of the 670s, maybe a bit of a vertical there, 5,000 of the Jan 700s going up today, 3,000 of the Jan 680s, all these more than the open interest, so pretty much opening paper on all of these. And yet, in spite of all of that, in spite of this straddle pricing in $53, this thing taking it on the chin here in the after hours, off $93 as we're speaking. So nearly 2x the straddle, which is already a wee bit rich to begin with. So there you go, premium buyers, wahoo for you. But it seems like a lot of you were piling into the upside, perhaps doing a little bit of echoes of the old school Apple skew. Got to have those calls, got to have them all day long. And so apparently, if all those were opening call buys, and it seems like a lot of them might have been, then perhaps not a lot of smiles on the faces out there of the Amazonians. Mr. Rock Lobster, was Amazon lighting it up in the old chat room today?
It was. Wasn't it up $50 today? And now it's down 100.
Yeah, a wee bit of vol. It was up $52. Yes, I neglected to mention that part earlier. Up $52.
Well, what's funny is we priced yesterday. We looked at like dueling flies. So there was basically, because Amazon does so much moving. Prior to earnings, we decided, well, we'll just do something different. So we priced a fly with the one long leg at $640, and we priced another downside fly with the other short leg with another long leg at $540. So you have an upside fly and a downside fly. So the upside fly today, you probably could have closed that for decent money when it rallied at the end of the day, and you will be closing the downside fly probably tomorrow for pretty decent money.
Yeah,
so
if you had both legs on, a little bit of a kind of a inverted gamma scalp there with the fly. But yeah, if you had the 4 cents to close out that upside fly, you're actually looking pretty good on that right now.
Yeah, you probably you would have sold at least some of them, because it would have paid for, it would have paid for about 90% of the trade.
Everything.
So,
yeah. It's all great.
So you want to give them a little bit of that. So yeah, it's that name has been reliable. Has reliably moved, more than the straddle value. It's just, it's very hard to spend $50 on a straddle. So we prefer to take the sissy way out and spend, just a fraction of those dollars, only 1/10, to try for some smaller flies. So that was the idea that was bandied about. It's worked the last couple of cycles. So. And it looks like it's going to work again.
It's a shame because, this is a perfect time, a perfect use case we could have had for the minis if they had managed to actually survive, and the industry didn't just screw them up royally and let them wither and die on the vine. This would be a perfect use case for retail now to pile into minis in Amazon and actually be able to trade it, as opposed to, maybe can I afford to do one fly out here? I don't know. Do I have enough in my IRA to cover that $500 options on that $500 name? The minis would have been perfect for that, and yet industry screwed the pooch royally on that. Perhaps not as much as Amazon is screwing the pooch apparently right now. It's inevitable whenever Amazon earnings season comes around. The articles about Amazon cash flow are just everywhere. I was looking at a few of them the other day, and just the myriad different accounting opinions that exist on Amazon. It really is kind of funny. It also does put in Apple in hindsight in a little bit different light when we're talking about Amazon. We give a lot of crap to Apple here on the show, and probably deservedly so, but when you're talking about names like Amazon, let's see if we can get the current PE on Amazon. 846.2 out here on the Amazon. So when you look at it from that perspective, yeah, Apple is a wee bit of a bargain, particularly to a diehard fundamentalist like you, Mr. Rock Lobster. We also got, coming out after the bell, we got EA. I know Mr. Rock Lobster likes to play in the gaming sector. Good old Electronic Arts. They closed it right around, where did they go out, listeners? They went out nearly $70, and their straddle about 450, so about 6.5% or so. Looks like they're off about a little over $6 to the downside, or about nearly 9%, trading right around 63.5 or so right now. So 2 in a row now where premium buyers are leading the charge. We'll see if that holds up throughout the day. We'll get to another bigger name that a lot of you like to trade here. And it's one we've said before has been kind of surprising in its comeback in terms of as a tradable name from an options perspective. This one had a better part of a lost decade behind it, and now in the last year and a half or so, it actually has been relevant again. This is a good old Softy. They closed today right around about 52 even or so. pricing in about a $3 straddle, so about 5.5% or so in out there. Looking at it here in the after hours, up about a little over $3, 3.25, so about 6.2%. We were seeing some people lining up to perhaps expect a little bit more rocking and rolling in in Microsoft so far with the options paper lining up. People may be expecting Microsoft to start being a little bit more exciting than kind of putting it back in that action-packed name. At least so far, this earnings is a bit of a resounding map, but we got some time yet. Uncle Mike, any of those names, obviously Amazon, but any of those other ones catching your eye out here in the after-hours brouhaha that is earnings season?
I mean, they're all catching my eye, but in terms of like what I'm playing, I mean, it's not Apple, so who cares?
Well said. We're back to those days, are we?
I wish we could be. I want Apple to go down to 60 so I can get back in it again. If Apple, would you please go down to 60 for me? I want to ride again. I miss putting on all that stuff going into earnings and me detailing it on the show. I need that to happen again. That was a lot of fun. You
got to have 10% or so of the portfolio in there just to have content for the show, if for no other reason. That's a business expense. You lose money on it, just write it off.
There you go.
You write off the cost, and you lose money, you write off the loss there. It's like a double win for you. There you go. Go for it, sir.
Of course.
Of course, but we are burying the lead, the biggest story of the day. Too bad Sebastian isn't on. He really would appreciate this. That the DeLorean is back. Forget about Ford Motors. DeLorean is making cars again. They are doing it. A mechanic, I believe, bought the name, and he's been refurbishing the cars for the last few years, and now he's going to actually start selling them again. So if you got about $100,000 lying around in your pocket, you can go buy yourself a nice DeLorean with a flux capacitor. So there you go, listeners. That truly being the lead story of the day and probably why the market was rallying so hard. We'll keep an eye on those other names, including maybe DeLorean, as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the funky segment we like to call around here Ye Old Odd Block, the portion of the show where we break down the weird, the wild, the whimsical paper that is catching our eye out here in the land of options. Going to kick things off in one. I don't think we've talked about this one, at least not in quite some time. This is ICICI Bank Ltd, ticker symbol IBN. Gotta love those. This is an ADR, if you probably haven't guessed. Closing today right around $6.50 or so not $650, $6.50. So for those of you out there looking for your cheapy name of the day, we got you covered. This one's off about 50 cents on the day, or nearly 7%. So not the best day from an underlying perspective out there in ICICI. Say that 5 times fast, listeners. This one does about 2,800 contracts a day, doing nearly 10,000, about 27,000 contracts going up today, listeners. Looks like the lion's share of that 27,000, about half, 14,000, coming in a pretty sizable call by, I think you can call it. Actually, no, excuse me. This was a call sale, which was going up on the Feb 7s. For a whopping 7 cents, paper selling one mega block, 14,000 times, listeners, pretty much hitting the bid, saying, yeah, I think we're kind of giving up the ghost. Feb's kind of coming, at least from expiration, is looming on the horizon, and there's 20,000 open on this strike. I'm guessing not many of those are long for the world here, so he's taking what he can get and rolling or closing them out, taking his 7 cents, hoping to live to fight another day. Size open interest still left about 6,000 or so open on this strike, but it seems like our friend here giving up the ghost that this puppy is going to pop anytime soon. Back about a year ago, back in Jan of last year, this thing was trading about 2x, about 12.5 or so, near 13, flirting with 13. So our friend wasn't too far out of the realm of possibility there that those 7s would come alive. Unfortunately for him, didn't seem to be the case, but there was a lot of paper lighting up out here today. Also, if you look farther out to Jan of 2017, perhaps our friend here reestablishing their 5,000 of the Jan 6 puts going up against 5,000 of the Jan 7 calls. Maybe a bit of a bullish risk reversal. I'll have to dig into that paper. I don't know for sure. Mr. Rock Lobster, take us off here. Kick us off. What's your take on the ICICI, aka IBN calls?
You know what's funny about this one is I guess, isn't this a Chinese and Indian bank? Which, right, I guess lately, 2 years ago, you would say you'd want to own that thing, right? And all of a sudden now nobody wants to touch anything.
Anything has Chinese and bank in the same sentence, you are touching it, not at all.
Yeah, so it's had a rough couple of years, high of $13, and now it's down to $6. So, I mean, it hasn't seen these levels in a while. It feels like they made a bet on earnings and it didn't pan out. So they said, you know what, we're taking our cookies and our chips and we're going home. That's what the trade looked like to me. I would be surprised. And the problem is they just sold the dead bottom, 7 cents for those things with, a week to go. It didn't look, totally unreasonable, but I guess they wanted, you have to move 14,000 of them. So, but that just looked like I'm giving up trade. I didn't see a block of stock, although it would be quite a strange way to generate some yield. We've seen it. We've seen it before.
I would love that. That would definitely make my odd block list if that was the case. Where do you get my yield? Oh, ICICI. AKA IBN for 7 cents.
7 cents. So, and I didn't see, a block that would be 1.4 million shares. There was a block of 300,000, but nothing that looked like it would be tagged to go with this. So I have a feeling it's just somebody's just given up. It has the smell of give up all over it.
Has the stink of death all over it. Well, there are about 14,000 of the Feb 6 puts open, 14,000 close on the calls today. So perhaps our friend there having used a risk reversal, or maybe, who knows, maybe he strangled it in the past too. That's why I kind of think maybe it's related to the paper going up out there in Jan 2017 right now, which is another Jan 6, 7, either risk reversal or strangle or something going up there. I haven't had a chance to intuit what yet. Maybe he's just giving up the ghost in Feb, keeping the puts open if they are indeed the short leg, trying to keep whatever's left of that premium he can get there, and then reestablishing for smaller size out here in Jan. So that's certainly a possibility. We'll keep an eye on that. Our friend perhaps not giving up the ghost entirely, just reestablishing a year out.
Just trying again.
Chinese banks, they could always have a comeback. I do like the idea.
Indian Chinese banks.
Oh, I'm sorry.
Not just a Chinese bank, but an Indian Chinese bank.
I do like the idea that he's trying to get his yield to 7 cents. That would be one of my favorite trades in the odd block in quite some time. Instead, we got to keep on rolling, listeners. Maybe, who knows? Maybe you want to get your 7 cents. Maybe you're writing these calls out there. Let us know what you think of writing cheapy calls for 7 cents in the Chinese-Indian banking conglomerate right now. As we move on into our next name, Abbott Labs. They've been on the odd block in the past. This is the name, of course, ticker symbol ABT. Closing today, $36.71, off nearly $4 on the day, or nearly about 9%. This name doing, about, and then not surprisingly, they had earnings this morning before the open market. Clearly not liking what they saw. About 4,600 contracts a day average, doing nearly 30,000 today, about 1.6 to 1 calls over puts. So perhaps leaning for some bounce later in the day. But a lot of that calls, of course, come in this one pretty sizable, looks like a roll here on the 38.42. And not in some Febs, not in some Mays, not even in some Augs, all the way out to Jan 2017, listeners. It was the Jan 2017 38.42 vertical going up. Looks like paper selling the 38s, buying the 42s, about 4,200 times, doing it for a whopping $1.45. About 5,000 open on the 42s, pretty much nothing open on the 38s. So it looks like that's why we think it's a bit of a roll coming down from the 42s, which, given the sell-off today, not really the most relevant strike anymore, getting down to the 38s, a strike with a little bit more meat on its bones, and also looks like doing it perhaps with some stock. So this could be a couple of different ways, Mr. Rocklaps. This could be your aforementioned search for yield, our friend out here looking to put on some yield with some stock, or he could be giving up the ghost on those 42s and trying to get to a more relevant strike. A lot of different ways to think of this one. Mr. Rock Lobster, what's your take on this vertical with stock here in Abbott Labs?
Well, there's a couple things. One is there's a lot of open interest on the 42s. And given that Abbott Labs has pretty much been in the dustbin lately, I think it's trading, is it a 52-week low today? It is. But the stock was in the mid-50s not very long ago. So whatever's happening there, it's sad, sad days for Abbott Laboratories as it plumbs the 52-week low. So I think somebody, had an aggressive call against. It looks like they closed it, and then with the stock down here, it looks like they might have bought a little extra stock to go with the position. Again, that's a hard because the right where the options traded, it looks like that's what happened. But the other choice would be somebody just sold a call spread and bought the stock, kind of semi-delta neutral. You just short the call spread and then long 66,000 shares. So I'm feeling it's either one of those, but I'd have to check the open interest on those doubles. I'm sorry, I think what are they? The 40? I think they're the 42s. Yeah, I want to check the open interest on the 42s tomorrow, because if not, it's just a straight yield play. It looks like they're trying to just make 10%. They're not figuring how low can Abbott go, and that's it. But this stock has just been decimated. So maybe a little bargain hunting.
Speaking of some bargain hunting, some of these names in the solar realm also have taken it on the chin over the past year or so. So perhaps our friend here looking for some love in our final name, JA Solar Holdings Company Limited, also an ADR going by JASO, JASO, closing today pretty much unched, about $8.65. This is the name that does a whopping 500 contracts a day, doing about 2,300. So not the biggest name we've profiled, but for comparatively, percentage-wise, compared to its typical volume, it's actually a fair amount. What caught our eye was a little bit farther out, not all the way to Jan, but indeed out to March. The March 9 started lighting it up this morning with about nearly 500 going up, paper buy-in for 45 cents. As the day went on, we saw nearly 3x going up more for a total of about 1,300 going up. For prices in that ballpark, the things went out 40 at 55, so they probably all of them went up somewhere in that range. After the initial kind, we saw going up in one block on the ARCA. The rest also got filled. We also saw a little bit of love filtering a little bit farther out as well, about 1,000 of the June 9s also going up out here today. So looks like a wee bit of longer term love. This was kind of, these bids were kind of hanging there and they were getting filled throughout the day. But looks like we got someone out here saying, you know what, I think this retracement we've seen out here in solar names is a wee bit overdone. I want to get myself some of that. This name, of course, about a year ago in about March or so of last year, spiking to about $13. Hasn't really seen those levels since. It's kind of been, had flirted with the 10 and 11 handle, but pretty much has been vacillating around. Our friend here thinking, you know what? Time for us to get back with some upside here. Mr. Rock Lobster, take us home on some, looks like some optimistic call buying here in JASO.
Yeah, it looks like optimistic. They lifted some offers. They posted a bid that was kind of in the middle, and then it got filled, I guess, when JASO, JA Solar Holdings, dropped down. So it looks like some stealthy call buying. The March might be closing, but I think it is. It looks like bullish paper. It's just not. It's just they didn't go in there and just like lift all the offers and demand to have it. So it looks just looking a little. Let's just call it a little bit bullish. A little bit bullish paper. Posted in all the 90 offers on the June 9s were gone by the end of the day. So whoever was trying to get that done feels like they've gotten their fill, so to speak.
How can you get your fill of JASO calls? I mean, you could just buy those all day long, could you not?
It's funny. You would think of, this is actually a solar company that is theoretically makes money, but nobody seems to care too much. because I guess I don't know what the deal with solar hyper competitive or the fact that it's based in China. But again, it's one of those companies that it's trading at like a 0 multiple. Nobody believes the earnings numbers they see, and all the oversupply in solar basically makes this company worthless. I think it trades at like a 4 or 5 PE. So it trades at book value apparently $16. Info coming from Livevol, and it's $8. So it's either the cheapest solar company in the world or whatever they're saying, whatever they're putting out there makes absolutely no sense at all. So
speaking of making no sense, I know exactly what this trade is. This is the other side of our friend selling the 14,000 of the Feb 7s in IBN for 7 cents. He's doing a pairs trade here with JASO. He's
raising his dough. He goes, the 7s are worthless, and I'm going to buy all these.
He's taking all the money he can out of IBN/ICICI so he can go load up, swing for the fences in JASO. There you go, listeners. With some ADR and nonsense behind us, it's Thursday. That means it's time for you guys to take the reins and dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, despite all of our madness here with earnings, we still got some time for you guys here on the old show. By the way, I've talked about doing the show, live before, maybe for our big 500th spectacular. We'll make that happen in some capacity. But meanwhile, we do record the shows every Monday and Thursday, 3 p.m. Central. So if you're around that time and you got some questions about options, tweet them over to us. We like to hear from you guys. I know people like to tweet in. Some people are doing it right now. So we got quite a few questions lined up here, but I want to make sure you guys who are coming in live get your chance here as well. We'll kick things off with BillyMo. He writes, hey, any new updates with after-hours options trading on earnings stocks? And he has a second part. We'll get to that in a second. The first part, after-hours options trading on earnings. This is kind of like clockwork. We get this pretty much every earnings cycle. I understand why you're asking it, because I kind of want to ask it too. I have done my due diligence for you guys. I have put this question to pretty much every major exchange head and brokerage head and others. Not surprisingly, the brokers are pretty much in favor of it. Anytime they can get more opportunities to trade, they're happy with it. The exchanges, trading firms, not so much. They don't really like the idea of staffing and manpower and logistics that goes into running that kind of stuff. There's also some questions about the quality and the depth of what those kind of markets would be like. And we've had lengthy debates and discussions on this show back when the Viceroy was on about after hours options and whether it should be done, whether it shouldn't, whether the liquidity would be up to snuff, whether you even need that, if you just need to have a limit order book or something like that. I kind of am in favor of at least having something. I mean, day like today with look at good old Amazon. We were just talking about it. They're off about 100 handles now, so up $50 intraday. Let's say for some reason you missed your chance to close it out at the end of the day on let's say the Rock Lobster's upside call fly, and maybe you got a chance right before the earnings were announced. You can come in, hit some liquidity in the after hours, and take that thing off before it got wiped out. You'd probably be a happy camper. Granted, you wouldn't get the best market. You wouldn't get as much as you would intraday when it's trading, but you get something, and something is usually better than nothing. I hear the arguments that, it wouldn't be a good experience and people would complain, and that inevitably would happen, but I think something's got to be better than nothing. And then in terms of, unfortunately, direct answer to the question, no, there's no updates. No one's looking to lead that charge, unfortunately, anytime soon. Also, I heard SPX options are looking into 24/7 trading. SIBO seems to be heading that way with a lot of their stuff. When they were at their big briefing they had a few weeks ago, they were really touting how much volume they were doing in extended hours for the VIX futures and options. I think it's about 9% right now, which is a decent chunk. They don't have full 24/7, obviously, but they have a pretty decent swath of the day covered now. I wouldn't be surprised if we see similar stuff on the SPX front, because if it's working for VIX, and they already have the SPX PM stuff, and they have the stuff on C2 that you can access in a little bit different ways. But I wouldn't be surprised to see the narrative for those products. Clearly, there's an institutional audience. There's an overseas audience that wants to play on their market hours, whether it's in Asia or whether it's in Europe. So that makes sense, whereas some of the more retail-oriented stuff maybe not. So I wouldn't be surprised if we see some sort of close approximation of 24/7 for that sometime in the near future. Mr. Rock Lobster, Uncle Mike, anything to add on either of these two issues?
Yeah, I think with the I really think that the single stock futures people could have had a big thing if they would have giving after hours trading on single stock futures, and if they would have offered the leverage that was needed in them. With single stock futures, the basic gist of them is that you could you could buy or sell a single stock future, but the maintenance requirement was going to be around 25% of the underlying price. And in reality, you can just buy a deep in the money call or a deep in the money put and get the same thing. However, if they would have given, say, 10-to-1 leverage on the single stock futures, then I think that would have been a hit for them. Now, here's the other thing, BillyMo, of what you could do if you're really looking to trade after hours. And I'm not sure how much how big your account is, but we've talked about on the show before how you can go long or go short stock to offset some option positions with which you have. Yes, that does take a lot more money to do, but if you have a portfolio margin account, usually you can get leverage to the point where it's 15% up or 15% down, depending on which broker you use. That might be something with which to look into as well. If you get a portfolio margin account and you want to leverage the stock just because you're only holding it overnight, or you know that you have 1 million puts on the thing and you want to buy some stock just to hedge the puts that you made money on. Let's say you bought a bunch of puts and you're making money on Amazon right now and you want to buy a bunch of long stock to offset and kind of take your profit that way. Who cares if you're levered because of the fact that you have long puts on it that you're just trying to get through the night. So I think that the main solution that I would look to on this, Billy, would be a portfolio margin account if you have the means with which to do so.
All right, let's see. Moving on here to a question from NVid. He writes, the junk bond market, is melting down and interest rates are hovering around zero. Maybe not for long if Miss Yellen has her way. He goes on to write, is the best place to find income these days via options writing rather than investing in fixed income or related products? Well, you're kind of preaching to the choir here in that sense, in that we've been down the options income rabbit hole for a long time on this show. You know, we've always said why search for a name that has hefty dividend yield when you could make that dividend yourself in pretty much any name you want to trade using options, you know? So that's always been our preferred, and certainly with the meltdown in some of these fixed income products right now, people are maybe starting to make that realization. Granted, with the rates low, you have to look a little bit farther afield, maybe not as far afield as 7-cent calls in ICICI to sell to get your yield. But you do have to look a little bit farther afield, maybe adjust your strategies a little bit, maybe get more into some of the meatier options, writing more towards the in the money rather than your traditional 2 to 5% out of the money call. A lot of people like to favor. So again, you're clipping some of your upside there, but also you can improve your yield that way. We've also seen some interesting data coming out of the SIBO just this week, actually, about the performance of writing weeklies versus monthlies. So you're probably going to want to migrate into the weeklies, and therefore a little bit more work, a little bit more time involved. But if you can do it 4 times a month versus once, the net every time you sell it's going to be a little bit less, but net aggregate over time, the returns are substantial in terms of how much better you do with doing the weeklies versus even just the monthlies. So that's a few interesting places. I know, Mr. Rock Lobster, you're chomping the bit to get in on this as well, just to distract you from the pain of watching your ice rink continue to melt. So what do you have to say for our friend here who's looking for income? Or is options really the best alternative? Is option the best option, pun intended, for generating income these days?
I think actually, just given the market environment, you know, just writing like more in the money calls against stocks at this point. You know, you want stocks, you might want to collect the divvy. You know, the upside I think is looking not as rosy as it has in the past. And I think, you know, writing kind of like 3-week options that are, you know, a few strikes in the money, you can actually get a pretty decent return on them. And if you get that other 5, 6, 7% pullback in the market like we've been seeing, you know, if you think about it, since August, it's happened 1, 2, 3 times. So, I mean, it's a way to smooth the volatility out and still give yourself some income on the right and still keep the stock. So, I think this is like, it almost seems like every year seems like a decent trade. I think this year will be more the year of, you know, writing calls that are more in the money or just slightly in the money. just because, I mean, the upside until the market adjusts to whatever this interest rate regime is, and China and this and that, a lot of volatility. So take the fat premium, take the fact that the VIX is 22, and if you're going to hold, if you're going to hold some of these names like a Walmart or something like that, or Abbott Labs, take the premium you get, and you can almost, there's a lot of times you could find 1 to 1.5% per month writing these options, which, at the end of the year is not too bad, especially if you're trying to buy, basically S&P 500 names. You just don't get that. You don't get that volatility right that often. There we go. That's my rant.
Yeah, I agree, Mr. Rocklop. So yeah, right where the meat is in the bones in those options. It's a better road to hoe. And who knows? Maybe you want to sell some 7-cent calls in ICICI. You never know. That could be a juicy trade too. All right, I'm gonna give up on that one because that one's just cracking me up. Mr. Rocklobster, we already talked to you. Mr. Uncle Mike, what's your take here on our friend looking for some income in their options?
I agree with what Andrew's saying. We actually just started a new portfolio at RCM called our triple income strategy. Now, full disclosure, we don't have exposure to ICICI, unfortunately. Maybe I'll talk our investor policy committee into doing that, but nonetheless, the 7-cent calls are exciting. But on a serious note, what we do is that step 1, we identify a stock with which we like. Step 2, we write a put. Step 3, we watch the put. Step 4, the stock's either going to get put to us or the put will expire worthless. Step 5, once the stock is put to us, it'll be a dividend-paying stock, so we will collect the dividend while owning the stock and selling a covered call against it. Step 6, I don't even know what step I'm on, but nonetheless, we will either get called away or we will continue to write calls on it one way or another. We've talked about this before, but we do have a portfolio now that specifically aims for stocks that have found favor with both fundamentally sound stocks, specific dividends, along with covered call premium. So if that's something with which you're interested in, contact me when I'll give my information at the end of the show.
The old wheel. We love it. I always used to tease Federal Holiday Mike about that one because I was like, where's the third income? But if you got the dividend names in there, then I understand where you're going for there. Otherwise, I think maybe you're going 2+. 2+ capital appreciation, but I still like it. I like the getting paid to get in, getting paid to get out, and who knows, maybe on the side you sell some 7-cent ICICI calls. All right, that's going to do it for the mail block. Now let's keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, let's do one last check-in here on the myriad of names reporting in the old after hours. Kicking it off with Amazon, it was down about $90 at the start of the show there, and a little bit of a rally coming back in now, only down about 68. So only down about 11% or so after hours. So still exceeding that straddle, but we'll see if that holds out or if it regains a little bit of that luster here in the after hours as things continue. Same with good old EA, was off about 5 handles before, and now here in the after hours off nearly 578, so about 8.25% here. And last but not least, good old Softy, they were pricing in not a spectacular move, but a decent move nonetheless. And we're seeing here that move actually retreating in the after hours. They were pricing in about a $3 or about a 5.5% move, and they're off less than $2 now, about $1.90 or about 3.6% in the after hours. So we'll see. Looks like some of the initial crazy moves, as they are wont to do in the after hours, starting to fade as calmer, cooler heads prevail. That said, going into the rest of this week, into the weekend, what's catching your eye? Starting with you, Senior Rock Lobster.
I just like to see if I guess there's rumors about OPEC and Russia getting together to cut production. Can you imagine, like those guys are really going to trust each other?
Yeah, that was a good one. I saw that. Yeah,
I know, but I guess desperate people do desperate things. So it could happen. It feels like oil's been rallying on it, but I think the market's going to stay semi-volatile until oil finds its bottom, and that's without like I said, without the Fed Pablum. it's just not. Stocks are going to be volatile, and that's the way it is for the short term. So I don't think there's any way around it.
Uncle Mike, same question to you. What is catching your eye, sir, in the week to come and into the weekend?
The analogy that I see from Russia and OPEC trusting each other reminds me of an episode of He-Man back in the 80s when the evil Hordak came in one of the first episodes, and He-Man and Skeletor actually had to team up to take on Hordak. Weird thing, but that's kind of what the equivalent of Russia and OPEC teaming up reminds me of. Nonetheless, there's still more earnings, which we're in the midst of earnings season, and I'm just happy with the fact that we don't have any Fed watch to do now for a while, but we will have non-farm coming up, not tomorrow, but next week, I believe.
I always can go with a good Masters of the Universe metaphor here on the old program, sir, so well done.
Thank you.
And unfortunately, on that Eternian note, we'll have to bring the show to a close, listeners. But before we go, one last time, let's check back in with my cohorts here, my partners in crime, to see what they have cooking that may interest you. Since he threw in such a great He-Man reference at the end, he gets to go first. Uncle Mike, tell us what's cooking in the land of going long.
Well, by the power of Grayskull, we have a lot of things going on. Should you be interested in buying my new book on Amazon, just go to Amazon, type in Go Long, Mike Tusaw, whatever the heck you want to type in, you will find it. We're very excited about it. It has had a lot of success as of so far in the second time around this is the second release of it. And also, if you are looking for income in this incomeless environment, or you just have questions on your overall portfolio, feel free to contact me in any way, shape, or form, 312-212-3531, or send me an email at mtusaw@rcmfs.com.
Hopefully you didn't get hurt falling off your chair there, sir.
I totally fell off my chair.
Oh, that was Mr. Rock Lobster, if you're still in one piece, what? It was all that sadness over, all the ennui over the ice rink. You couldn't handle it anymore. Is that what it was?
Exactly. I practiced slipping in my office.
Yeah, there's nowhere else for you to slide, so you have to do it in your office. All right.
Just so sad.
Before you kill yourself over there, what's cooking in the land of the pit?
Option Pit. We're going to have a beginner boot camp end of February. Look for it on our website, www.optionpit.com. Go to the events tab. Do your learning, and we have had. Basically, our Saturday events and our boot camps, we've had incremental growth like every month. So, and people keep coming back. For some reason, they like what we say. I don't know what it is. I don't know. It totally boggles my mind, but yet they do. They do.
There you go. Head on over to optionpit.com so you too can have incremental growth, and you can learn what the Rock Lobster and the Greasy Meatball are cooking up over there. And on behalf of the Rock Lobster and the aforementioned Greasy Meatball, couldn't be here, but I'll throw him a little plug anyway. And, of course, Uncle Mike and, indeed, myself. I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, doing whatever it is you do to get this program, and, of course, for sending in such great questions. Keep them coming. Remember, Mondays and Thursdays, 3 p.m. Central, you got a question, tweet it to us. Probably the easiest way to get it to us live so we can actually see it and maybe include you on the program. And we'll see you next time for more The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.